Today in this video, I really want to kind of cover the volume profile and how I incorporate it into trading futures for myself, but maybe it'd be something that can open up your eyes to maybe want to possibly use, in your trading. Again, this is all surrounding supply and demand. I talk about this in videos before, but I want to show you how powerful it can be if you choose to use or incorporate this indicator into your own trading, maybe to help increase your win rate, But anyways, it's helped me over the years, and it does help me identify when I use it, more key areas or specific areas to actually look for entry points to take trades from. Now, you don't do, is it a necessity? No, it's not. But it's one of those tertiary tools or indicators that you can use once again that may help increase the chances or of a trade working in your favor, meaning marking something as higher probability versus something that's lower probability. Okay. Now, I don't have any specific trading courses or mentorship programs that I charge, hundreds or thousands of dollars on, guys. If you're interested in really receiving the breakdown on trade setups after setups, this is a lot of video content that I've covered to where I go over these breakdowns of these trade setups that I post over on the Discord. Basically, I'm going through it and talking about market structure, why I took the trades, what I was looking at, where to place your stop loss, where to place your profit target, things like that, so you can look for these same type or similar setups within your own personal trading. You may want to think about becoming an elite channel supporter to and join the group just as well, to where you get the trade breakdown videos. I'm talking about there's tons of them already there that you can watch. You also get the video playlist and a great video that I cover on market structure. It's only $6.99 a month. You're talking about pennies on the dollar a day. Again, if you go through it and it doesn't work for you, then you really don't have much loss at all. I'm not here to charge people again hundreds or thousands or thousands of dollars, to share something that really I believe I'm putting it out there basically for free. If you spend time watching the video content, you may catch on. But if you really want more of an insight of these setups that I take and break down for you, you may want to become an elite channel supporter. Again, you receive all that is included in the tier: the trade breakdowns, the video playlist, and the great video that I cover on market structure. So let's jump into the video now without further ado. What you again have to master is market structure. Which way is the market actually moving? And I like to use a higher base chart. I use range based charts. So, it's just basic understanding, is the market making higher highs and higher lows where it's breaking through key areas of structure to the downside, or breaking and making higher highs and higher lows, taking out structure back to the upside. So prior to yesterday, all right, which was the 14th of March, we were making lower lows and lower highs. So we were in a bearish move to the downside. But on the 13th, made a final approach to the downside right here. And then it's like clear as day. You can see where the market is making these higher highs and higher lows back to the upside, breaking first area of structure above here. That's a, decent area of structure. And the way I like to look at and define major versus minor structure is, was there a nice development of structure that where either market broke lower or came back up and took out? If you look where we made this higher low and broke to the upside, we took out structure above here, but we also broke above this area here. So when it made this high right here, it broke above here, it pulled back, created another structure break above this area here, above 19,397. And then we continue making structure breaks to the upside, taking out more as we continue pushing higher. So you shouldn't be looking for any opportunities really to go short. Your opportunities should be going long. Yesterday was probably not one of the best trading days, to be honest, because we didn't really get any decent pullbacks to key areas, in this case here of demand, because we're looking for high probability demand zones to go long. Some of the best two of the best setups that I found was right here, where it broke an area of structure. Move this right here above this area here, creating this small little area of demand was created. And the really good opportunity was where the market pushed up, pulled back, and then broke above this high right here. And you have on the 120 range chart this area of demand sitting right here where it pulled back. So this was really a clean setup to take, trading based on the direction of the market, making bullish movement to the upside, looking for and trading off this area of demand right there. And looking at how we trade the strategy, where we're looking to mark up. Okay, we got a structure break to the upside here. The market pulls back to a key area of demand, aggressive buying to the upside. This is an imbalance resting back here at the zone on the 120. We've got our 120 range higher base demand zone, right? We go ahead and mark it up. As the markets were tracing back to that zone, we then would go down to what our lower base chart. This is that area right here. Now, one thing in particular about this setup here is that there's really no defined 24 range demand zone. There is demand zones, but they are low probability resting within. Now, you have to make the decision if you want to trade a retested zone or not. These are low probability zones because there is no imbalance resting back at, say, for instance, like this zone right here. Okay, this, even though it rejected right here, this was a valid zone when the market reacted off of that area right there. Okay, because the market broke structure right here. We also pushed higher, broke structure above here. We also broke higher and broke structure above here as we were making these higher highs and higher lows on the 24 range chart. There was also a tested demand zone resting right here as well if you're looking to trade off. But again, this was no imbalance there. So these are low probability zones that I consider them because the market had already pushed up and came back on candles, wicks of candles, and tested right back to the zone. Like this candle here, it came back, it tapped right into the demand zone, right? So you have to make that choice if you're going to trade the low probability or not. For me, I'm interested in trading high probability zones. And we're going to go over the volume profile piece here when it comes to the strategy. So when the market came back, there was nothing for me high probability based on the inside of the 120 range demand zone here. No 24 range demand zone. So I'm looking for a smaller 24 range demand zone resting on the inside of the higher base zone that I marked up on the 120. So in this case here, I didn't see anything. So then I would, what I prefer to do is wait for the market to start showing me some bullish movement to the upside where it's starting to take out structure going back higher in the direction of the higher base chart. So making higher highs and higher lows, pushing higher to the upside where we're, basically breaking above an area of structure. So like right here, it pushed up, pulled back, broke higher. This is a low probability zone here. Again, it broke up to the upside. There was a structural break here to the upside. It did come back to this small little area right here. Okay, this is a small little area of demand right here. But you got to be very careful, like I always talk about in videos. Look to see what's above you. And in this case here, there is a supply area resting right above. So I'm not going to take a trade right into off of an area of demand on lower base as we're re-breaking structure back to the upside. And then I'm trading right into an area of supply. That doesn't make any sense. So when it came down here, there was a valid area of, let's see here, coming down. It actually broke through this area here. So no, it broke to that zone, this zone right here. So that's invalid right there at that point. So I wouldn't trade that. So then it starts going back to the upside. I'm going to get into where we could find a nice zone now. Comes back, okay, we push higher right here, right? And then it breaks above this area right here. Structure. Comes back, okay, we got an area of demand resting right here, but it's low probability again, okay? So I'm not interested in trading it. It comes down. Then what does it do? It pushes up and we take out more structure to the upside. So what I'm trying to get you to see is that, yep, okay, right here, we broke structure to the upside, all right? And on the break to the upside, the only really area of demand where there's an imbalance that would have been resting back down here. Here, this is low probability. Here, this is low probability. So, and it didn't come back that far down here. It then again, pull back, broke structure above here. And now this is where I can go ahead and mark up a valid demand zone on the 24 range chart. Yes, it's not back down here on the 120 demand zone where I talk about the zone within a zone in most instances. But still, again, I talk about if we can't find a valid high probability zone within the 120 range zone, meaning finding a high probability 24 range demand zone on the inside of the 120 range demand zone we've already got marked up, then we just wait for the opportunity where the market starts to show, in this case here, because we're bullish now, starts to show bullish movement to the upside where it's breaking structure higher to where we can get a clean setup to a 24 range demand zone. In this case here, it broke above this high here. That's why I have this arrow marked here. When it comes back, there's a couple areas you can have marked up, like right here. This is a valid demand zone here, and this is another valid demand zone resting right here. But, and I believe there was one down here as well. So this is the reason why I talk about where you got the structure breaks. You can pull a fib retracement if you want to. I talk about the 50% areas, the 61.8, the 76.4. The key to it all is really waiting for the market to come back to the origination point, so where the market really started making the aggressive push to the upside, where it takes out an area structure. This would be above the 50% area right here, but it did react off this area here. But you got to pay attention when the market was retracing high higher low and coming lower. There's an area above here that where the market could stop, kind of bounce at, right? So there's an area, nice area of resistance, or a small area of, if you want to say, supply right here. I wouldn't trade this right here off of this zone right here, because yes, it's a high probability demand zone, because we got to break a structure above this area here. But if I'm also looking at things in relation to the leg that broke the area structure higher to the upside, broke above this high, I'm also looking at the volume profile back to an area where there are the first area of high probability demand on the 24 right here. I got a little low volume, not say low volume, there's low volume right here, but it's a high volume node here. But if I look below me where I have a high volume, or I should say a high probability demand zone on the 24 range, and this area of higher volume, it would make more sense to take it from here or possibly down here, okay? Especially here, because this is an area where the market really started pushing to the upside. But there's a lot of volume sitting up here at this demand zone, which means there was a lot of engagement in the market, a lot of buying that took place in this zone here. This is the reason why we have a higher volume area right here off this leg. This would make sense right here to take the trade from here. And as you see, if you got into the trade aggressively, say it's 667, then you could have taken it from there back up to at least this area here, because this is an area of supply resting above to where the market can react at. So we're talking about taking it from 19,676 back up to this area here at 19,689. Pick yourself up some nice, points there, right? So then the market comes back down. It does test this area of demand right here, and then even actually reacts off of that area of demand right there and goes back up to what we have here in the area of supply right here, resting up here at 670. So maybe you got in here at 659, taking a trade back up to 670 before it comes lower. This is a high. This would be our most recent high then. At that point, it comes down, it goes back up, and it breaks this area structure right here, right above here at 19,712. That's why I have this I have this volume profile area marked up right here off of this leg to the upside right there. As we break this area structure, you can see the nice accumulation of structure coming to the downside, okay? Not only is it making lower lows and lower highs coming lower, but it's also taking out some structure points, meaning taking out lows coming to the downside to the left side of the chart. That's why I always talk about look at structure to determine, is this a nice area or major area structure that's being broken above these highs? Yes, because we have a development of structure where it created this nice area of formation of structure coming down, then coming to the upside, breaking this high here. Same thing here. Nice development of structure coming down, taking out some lows coming to the downside to the left-hand side of the chart before going back up and breaking structure to the upside. Again, all this is off the 24 range chart, but we're already bullish on the 120. As we break structure above this high here, you got to then say, okay, where are my my high probability zones at? And this is a low probability zone right here. It pushed up, came back, it already tested that area right there. Here's a high probability zone right here, okay? A demand zone, okay? At the latter portion of this leg to the upside. So this is going to put you around about the 76.4% fib retracement area on this move to the upside as it comes back. Look also what we have here. Also a high volume area. This is a high probability demand zone, okay? There was engagement with the market, where buyers were going long here, coming back, okay? More buyers stepping into the market here. So you could get into a trade right here. Now, scalping off the 24, you must understand that scalps could be, very short, okay? But you got to pay attention to price action as it's coming back to the zone. There's a zone right here, okay? There's a zone right here. All right, comes to it, get into the trade, say around about 670, take it on up here to 675, 76. Not a lot right here because we have this aggressive area selling what is a supply area right here, as you can see, resting below. But this was a trade opportunity to pick up a few points, okay? But you got to pay attention. If you are looking at going long right here, what happened on the move to the downside and look where the market can stop the moment you get into the trade, or at least react at right above right here. Once you got to the trade here, look, you got to know right here in this area the market can react at. There's a high probability supply area right here that the market can reject from, and it did that and it pushed lower. Okay, so you got to be able to determine and see things like that when you're trading. But that's why I'm trying to show you that the volume profile is a very good tool to use in helping once you identify the structure breaks and identified, high probability zones. Just draw it up or mark it up to see say for example right here, you already got this demand zone right here, high probability demand zone marked up. I'm just going to show you. I pull a volume profile for this leg here, where we got the structural break to the upside. And then I've already got this zone here marked up. When the market's coming back to the zone, I can clearly see that this is a high probability area. And this is really on this leg here. This is the VPOC of this leg to the upside right here, where there's a volume, massive volume area right here. And there's a lot of buying right there. So why wouldn't the market want to react again off that area with this high probability right there? Okay. So you don't need to spend thousands or hundreds of dollars on trading courses to be able to identify this stuff. I'm basically breaking it down and giving it to you right now so you can understand, the effectiveness and the importance behind using a volume profile tool. Okay, do you need it? Is it essential? No, but it does kind of paint the picture a little better if you are able to, mark up, your charts like this to kind of see, those high probability areas where is volume resting at according to. Now, if I'm just looking at here, the volume profile on the right hand side here, this is what I like to call a dynamic volume profile, okay, because I can bring it in and out. You can see volume shift there. If I look at it where we got the structure break here, as we push to the upside, okay, and the market comes back, that's a high volume area right here, right? This is a low probability area though. Okay, I mean low probability because the market came back, the wick of this candle right here came back and tested the zone here. So I'm not interested in this area. Down here, yes, high probability, nothing came back to the zone until it came back right here. We're at a high volume area as well. Again, I always talk about taking the trade from the latter portion, say for example, of a high volume area. And as you can see right here, I'm gonna go ahead and mark this up. When the market comes back down here to the zone right here, we're at a high volume area, but it's kind of in between a high volume right here and a high volume here. So it is a low volume node right here. The market comes beneath it. I like to take my trades going long from the lower portion of a volume area going back up to the upside to maybe, where there's an area of volume resting above. So that's the part I like to take my trades from if I'm going long. I'm going short from the upper portion of a high volume area where the volume starts to thin out to go short off of, okay? But this is a simple way to incorporate the volume profile in the strategy that you can use surrounding supply and demand. So hopefully that makes sense. Again, anyone out there who's not a current subscriber, please take the time to go ahead and subscribe by clicking that button, okay? That sub button. Make sure to turn on your post notifications by clicking the bell as soon as you click that subscribe button so that you never miss any of the uploaded content here on the channel. Again, if you're interested in becoming an elite channel supporter or even join the Discord, which is free, both links are down in the description portion of the video. One is right above the other. The Discord is first. The second one is the link to become an elite channel supporter. It's there. Click on it. Make sure to choose the second tier for $6.99, and that's going to give you direct access, and that's monthly. Okay, so that's like pennies on the dollar on the day, and that's going to give you direct access to all that additional video content surrounding the breakdowns of trades that I've taken and posted over in the Discord. Now, if you found value in today's video content, I'd greatly appreciate it if you click that like button right now by smacking that thumbs up button. I'd appreciate it. That helps get the video content to, surrounding the concept, surrounding the information that I'm sharing to the individuals out there that are searching for it on YouTube. Okay. Outside of that, that's all I have, guys. I appreciate it. Take care, and I'll see everyone in the next video, and have a great rest of your weekend.